Picture this. The crypto market is in free fall. Panic spreads like wildfire. Groups of investors start selling frantically. Social media is flooded with doomsday predictions. You watch your balance shrink rapidly, and that uncontrollable urge to sell kicks in. After all, the fear of losing everything is overwhelming. But here's the question: what if this emotional reaction is precisely what separates those who lose from those who actually win in this game? This scenario plays out every time the market swings dramatically. Thousands of investors jump in and out based on impulse, and most of the time, they end up losing. It's always the same story. During a bull run, everyone thinks they're going to be millionaires. In a downturn, the same people panic and flee. But while the majority reacts this way, a small group remains steady, observing everything without rushing. They don't give in to fear or euphoria. They know something others fail to see. The truth is, this behavior isn't new. Throughout history, there have always been those who panic in the face of uncertainty and those who face it with composure. Centuries ago, Stoic philosophers already taught that we have no control over external events, only over our reactions to them. In the world of crypto, where everything can change in a matter of hours, this mindset can be the difference between building wealth and destroying your portfolio. And that's exactly where the real challenge lies. The market tests not just your strategy, but your emotional discipline. Can you withstand the pressure without giving in to panic? Do you know how much risk you're truly comfortable with, or are you betting more than you should? Those who understand their own limits and stay focused on the long term are the ones who truly win this game. But why do most people fail? What makes so many fall into the cycle of euphoria and despair? The answer to this has been around for centuries, and if you don't grasp this lesson, you might be doomed to repeat the same mistakes. A beginner investor looks at the market and believes they can decipher it. They analyze charts, study trends, and read predictions that claim to reveal Bitcoin's next big move. But then, something unexpected happens. A sharp drop, negative news, or a sudden fluctuation that makes everything feel uncertain. What seemed like a sure bet turns into doubt. And suddenly, they realize they have no control over anything. The idea that we can predict the financial future is a dangerous illusion. People want to believe there's a foolproof method, a secret formula that guarantees profits. But the reality of the market, just like the reality of life, is far more chaotic than that. History proves that the biggest financial booms have been followed by equally dramatic crashes. Bitcoin itself, now seen as a solid asset, has suffered drops of over 80% before reaching new highs. And yet, many still believe they can anticipate these movements with precision. The problem is that overconfidence in one's own judgment is often the first step toward failure. When things are going well, the investor feels invincible. They increase their exposure to risk, believe they can exit before the collapse, and underestimate warning signs. But when the market turns, and it always does, that same confidence turns into despair. The belief that everything could be predicted is replaced by the feeling that nothing makes sense. And it's in that moment that the most destructive decisions are made. Throughout history, this same trap has deceived empires, strategists, and rulers. Julius Caesar, before crossing the Rubicon and taking Rome, spent years waiting for the right moment. He knew that a reckless move would mean ruin. Other generals tried to force destiny and paid the price with their downfall. In the world of investing, this lesson repeats itself in a cruel way. Those who fail to respect uncertainty are ultimately destroyed by it. This is exactly why the Stoics warned against attachment to things beyond our control. Marcus Aurelius wrote that the universe follows its own course, regardless of our desires. Believing we can control something as volatile as the market is to fight against the very nature of reality. The only real choice we have is how we respond to events, whether with rationality or with panic. An investor who understands this shifts their approach. Instead of chasing impossible certainties, they learn to navigate chaos without being consumed by it. They don't try to predict every fluctuation because they know that pursuit is futile. Instead, they build resilience and adjust their risk exposure to a level they can handle without fear. Rather than asking, "Where is the market going?" they ask, "How can I prepare for any scenario?" Few reach this level of maturity. Most will continue oscillating between euphoria and panic, repeating the same mistakes and blaming external factors for their losses. But those who develop this mindset learn to play a different game, one where victory doesn't come from prediction, but from the ability to withstand uncertainty without losing control. And it is precisely this skill that separates those who fail from those who thrive. Most people believe that getting rich with cryptocurrencies is a matter of luck, or simply being in the right place at the right time. They look at those who bought Bitcoin early and assume their success came from making a lucky bet. But what almost no one realizes is that for these investors, the real challenge wasn't buying, it was holding. Thousands of people had the same opportunity, but they gave in to fear during the first drops and sold before the real appreciation happened. What determined who thrived wasn't just the initial decision, but the ability to endure chaos without succumbing to pressure. This is where most people fail. Patience seems easy in theory, but in practice, facing uncertainty requires emotional control that few possess. When prices drop, the mind goes into alert mode. Fear takes over. The urge to do something, anything, becomes almost irresistible. The investor feels the need to react because the discomfort of waiting is unbearable. But this anxiety isn't a sign that something is wrong with the market. It's a sign that something is wrong with how they perceive uncertainty. The Stoics understood this long ago. To them, true discipline wasn't about acting on impulse, but knowing when not to act. Epictetus said that a wise man doesn't let himself be swayed by things beyond his control. He doesn't make decisions based on fear or momentary euphoria. He observes, analyzes, and waits. In the financial market, this lesson translates into something simple yet powerful. Those who can't handle uncertainty will always make bad decisions. The irony is that those who try the hardest to avoid losses often put themselves in even greater danger. They sell at the bottom, buy at the top, jump in and out without a clear strategy, all because they can't stand the idea of not controlling what happens next. But those who succeed aren't the ones trying to predict the future. They're the ones preparing for any scenario. They accept volatility as part of the game and adjust their risk exposure to a level they can handle, without letting pressure force them into actions that go against their own strategy. In the end, the question isn't whether Bitcoin will go up or down. The real question is, can you endure the swings without compromising your long-term vision? Because if you can't, no strategy will be enough. But if you can, then there's something the Stoics can teach you, something that can turn this mindset into your greatest advantage. When Bitcoin first emerged, no one knew exactly what its future would be. To many, it was just a technological curiosity, something with no real utility. Others saw a possibility, not a guarantee. They weren't certain of its success, but they understood a fundamental principle of smart investing. Getting into something where the downside is limited, but the upside is massive. This is a rational, strategic way of thinking, one that closely aligns with how the Stoics viewed the world. The focus wasn't on predicting the future, but on acting in a way that any outcome could be endured. History has always favored those who can navigate uncertainty without losing their composure. The Roman Empire wasn't built overnight, and its stability came from leaders who knew how to build slowly without chasing immediate glory. Marcus Aurelius, one of the greatest emperors and Stoic philosophers, ruled with the belief that true power came from patience and discipline. He understood that impulsive decisions could jeopardize years of progress, so he always made choices with a long-term perspective. In the financial markets, this lesson repeats itself. Those who invested early in Bitcoin and held their position didn't do so because they had a mystical vision of the future. They did it because they understood that volatility is part of the process, and that acting on impulse rarely leads to good results. In every bull and bear cycle, the majority of people followed the same pattern, buying when optimism was high and selling in panic. But those who remained rational without letting fleeting emotions take over were the ones who reaped the biggest rewards. Seneca once said that true wealth lies in one's mindset, not in money. According to him, a man can be financially rich, but emotionally poor if he lacks control over his decisions. This applies directly to the world of cryptocurrencies. Those chasing instant riches often make reckless decisions and lose everything. But those who understand that patience, discipline, and strategy are the most valuable assets are the ones who build real wealth. Alexander the Great didn't win his battles because he was stronger than his enemies, but because he knew how to wait. During his campaign in Asia, he spent months analyzing territories and studying his opponents before making a move. Many times, he resisted the pressure from his own commanders to act before the right moment. This same principle applies to any financial decision. Those who understand that they don't need to act all the time, but rather at the right time, are the ones who thrive in the long run. The Stoics believed that the world is always in flux, and that those who learn to adapt rather than resist change are the ones who prosper. In times of crisis, it's not the most impulsive who survive, but those who accept reality as it is and adjust their strategies without panic. In the financial market, this idea translates into the ability to endure fluctuations without fear, and to stay committed to a well-defined strategy rather than reacting emotionally to every shift. Epictetus taught that freedom doesn't come from controlling events, but from controlling how we respond to them. In the context of Bitcoin, this lesson is clear. The real value isn't just in the asset itself, but in the mindset of the person holding it. Those who panic at every market movement are always at its mercy, but those who maintain emotional discipline turn uncertainty into opportunity. The biggest mistake isn't just acting too much. It's exposing yourself in a way that you can't withstand the test of time. It's not enough to know how to wait. You need to have the structure to do so. In the market, this means never investing more than you can afford to lose, keeping reserves for moments of crisis, and understanding that resilience isn't just mental, it's also practical. The Stoics believed that time reveals all things. Those who rush often stumble, while those who act with patience build something lasting. Success rarely happens overnight, whether in empires, armies, or investments. Wealth building is a process that demands more resilience than genius. But there's still one final crucial point that separates those who thrive from those who fail. Because it's not just about waiting, it's about knowing how long you can afford to wait. And this is where Stoicism unveils one of its most valuable lessons about risk, control, and financial freedom. Most people enter the world of investing with a distorted mindset. They believe the secret lies in finding the perfect asset, the stock or cryptocurrency that will guarantee extraordinary returns. They spend hours analyzing the market, searching for signals and predictions, convinced that technical knowledge is the key to success. But investors who truly thrive know that the real advantage isn't in what you buy, it's in how you manage risk. The most common mistake is excessive exposure. When someone puts all their money into a single asset without considering adverse scenarios, the problem isn't just financial, it's emotional. The fear of losing becomes unbearable, and every price fluctuation triggers anxiety. The investor can no longer think clearly. They become a prisoner of the market. And as Epictetus taught, freedom is not in owning everything, but in not being enslaved by what you own. The Stoics always advocated preparing for hard times. Seneca recommended practicing temporary deprivation, not out of necessity, but to train the mind not to fear loss. This principle applies directly to finances. If you invest more than you can afford to lose, you're not investing, you're gambling. Those who understand this never expose themselves in a way that a single event could wipe out their stability. This leads us to the essential concept of risk profile. In the crypto world, where volatility is extreme, no one should invest more than they can emotionally handle. A Stoic doesn't act based on promises of quick gains, but follows a solid, rational plan, even in moments of uncertainty. They set an exposure level that allows them to sleep peacefully at night, regardless of market fluctuations. The big problem is that most people ignore this rule. They get carried away by greed, believing that the higher the risk, the greater the reward. But this approach ignores a fundamental principle of life. What rises too fast can fall just as quickly. Patience and gradual building have always been the safest strategies, both in investing and in philosophy. Marcus Aurelius said it best: "Nothing grand is created all at once." Those who understand this learn to diversify and build a resilient financial structure. They don't put all their chips on a single asset, but spread their investments in a way that allows them to weather crises without panic. They know that there isn't just one path to wealth, but rather a combination of habits and decisions that over time create long-term stability. If you want to deepen this mindset and apply Stoic principles to your financial life, the ebook, Stoic Wealth: How Philosophical Lessons Can Transform Your Financial Life, can be a valuable resource. This introductory guide combines Stoic teachings with solid financial practices, helping you make more rational decisions, avoid emotional traps, and build wealth without anxiety. After all, true wealth isn't just about money. It's about peace of mind. In the end, what separates those who prosper from those who fail isn't just the choice of investments. It's the ability to stay steady in the face of uncertainty. The true Stoic investor doesn't chase immediate gains. They build a system that protects them from their own impulses. They understand that patience isn't just a virtue, it's a competitive edge in the world of finance. The market rewards those who can think beyond the present moment. Just as the Stoics trained their minds not to react impulsively, successful investors do the same with their money. They don't panic over a crash, nor do they get overly excited over a rally. They remain balanced, knowing that success doesn't come from luck but from discipline. So the final question isn't whether you should invest in Bitcoin or any other asset. The real question is, are you investing with the Stoic mindset, or are you letting the market dictate your emotions? That answer, more than anything else, will determine your true financial freedom. The key to winning in the financial market and in life isn't predicting the future, but controlling how you react to it. Bitcoin didn't become a valuable asset because someone perfectly timed their buy and sell orders, but because some understood that patience is the greatest ally of growth. True wealth doesn't belong to those looking for shortcuts. It belongs to those who build a resilient mindset, capable of enduring market swings without losing focus on the long term. The Stoics teach that we shouldn't place our peace in things beyond our control. In investing, this means letting go of the illusion that risk can be eliminated or downturns can be avoided. They will always come. The real question is whether you are prepared to navigate them without compromising your emotional and financial stability. Those who win this game aren't the ones who act the fastest, but the ones who stay steady when everyone else is losing their heads. That's why a true Stoic investor builds their strategy based on logic, not emotion. They study, diversify, maintain a risk profile aligned with their reality, and understand that patience is worth more than any prediction. While most people chase the next big opportunity, they strengthen their discipline and put themselves in a position to thrive in any scenario, because in the long run, those who stay balanced always come out ahead. Now tell me, what's your strategy for dealing with market volatility, including Bitcoin? Comment below. If this video gave you a new perspective on investing and Stoic philosophy, leave a like and subscribe to the channel for more content like this. And remember, sometimes the best strategic move is simply to be patient. Stay on the path to prosperity. Until we meet again.